Hello, everyone, and a very warm welcome to today's major markets update for Saturday, April the 22nd, 2023. Sorry, no change, which is good. This means that the same parameters remain in place as we have been tracking all week, if not for the last 2 to 3 weeks. So no change is a good thing. It simply means that the market is mostly going sideways. Eventually, we'll get a directional move. So please be patient. Not my fault the market goes sideways. There are two types of corrections, those in time and those in price. And it seems like we have currently one in time going on. So the S&P 500 has only been doing three wave structures up and down over the past 2-3 weeks. That's very hard to assess and to make reliable forecasts on because it's such an overlapping price action. We have been having a hard time in identifying high probability trades because the wave structure is not so clear on the smaller degree. But again, the parameters are still the same. Support remains at 4,085, 4,070. Resistance remains at 4,160. This is on a daily closing basis. We break support. We're likely in this larger wave 4, already targeting 4,040 plus or minus 30. We can easily go to 3,900, but that's not what I expect. If we break out over resistance, we're going to target 4,180, 4,200, and we can extend to the 4280s if the market so desires. That will then be the end of red wave 3. The NASDAQ100 remain essentially range bound, but we have several wave counts to content ourselves with. The first one and the preferred one is the ending diagonal C wave to about 12,800, 12,850 on the NASDAQ100 and about 12,000 on the NASDAQ. That one remains preferred unless we break out above 13,100, and then we can target 13,500 plus somewhere early May. Dow Jones is loud and clear in the green wave 4 that we have had on the map for the last 2 weeks almost, to ideally 34,000, 3,320. Nothing has changed. That's the ideal target zone based on textbook patterns. But we can already have completed the wave 4 at Thursday's low, or we're going to only stall at 30,200, 30,540. Okay? We don't know just yet. That's a little bit uncertainty with fourth waves. But we know that if we go below 33,120, the odds increase. We only had 3 waves up from the March lows. So this is corrective, and then we're going to look for much, much lower prices. Conversely, the breakout above 33,950 targets 34,400, 34,500. Okay? I expect a breakout for the green wave 5. But I'm well aware that if we are going to break down, we have our insurance policy in place, and that is our GTFO level. The IWM, in the meantime, I think we should not get too bullish until it breaks above 180. That remains the line in the sand. If we break above 180, we're going to run to the 190s. 185, 192 is the larger target zone, with preferred 189 plus or minus 1. So we'll have a fantastic trade setup if we see that breakout. Let's put that in words, or actually better in charts. So here is the NASDAQ. As you can see here, we haven't gone anywhere over the last 16 trading days. It's unfortunate, the nature of the market, but we're still above the 50-day, 200-day smoking cloud, and it looks like it wants to go to this 12,000 level. If we break above Thursday's high, which is 12,150, I think we can put a fork in it, and then we had a, I would call, running flat ABC pattern, and that's all she wrote. So the preferred path for the NASDAQ 100 is this 3-4-5 setup to 12,800, 12,850. But again, if we break above here, 13,100, we're going to go higher. Okay, so that is, of course, our cutoff level. Why? Because then we start to make higher highs, and we haven't seen that yet. That is our cutoff level for the bears. Alternatively, we have a very complex wave 2 that kept meandering sideways lower. And as long as we hold 12,850, we should be good. I'm going to take these things off the charts there. And of course, the cutoff for the bulls is at this level for this wave count. Okay, that is quite obvious. And honestly, if we're going to drop, we could actually be targeting much lower prices. But for now, I don't think so. Dow Jones, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. Again, 9 trading days above 33,600 and pretty much below 34,100. So a very tight trading range. And we are now done with the overbought conditions, essentially. 33,600 and a little bit remains the line in the sand. We go below it, we can target the lower end of the target zone here in green and red. So no surprises, we go below 33,120. I think we're looking at something entirely different. So here's this hourly chart of the S&P 500 with the loud and clear ABCs everywhere. ABCs, ABCs, ABCs. So it smells of a ending diagonal, which are very hard to forecast because of their overlapping nature. Once we've done an ABC, can we then add another ABC? Sure we can, for a continuation of the uptrend. As long as we're going to hold today's low, we're fine. We break below it, again, we can target the lower ends, 4,040 plus or minus 30, okay? Somewhere around there. So we do really want to hold these levels with, of course, 4,085 is, of course, a loud and clear line in 4,070, okay? Remains the line in the sand. We break out, then 4190, 4285 is the ideal target. IWM. Looks like an AB 1-2 setup, and ideally 3, 4, and 5 are coming, but of course we need to break out above a little bit south of 179 and 50 cents. We break above it, then I'm going to look here 185, pull back 188 or 190, somewhere around there. Okay, so this is, I think, going to be a nice trade if it sets up. How we're doing then on market breadth? It's pathetic on the NASDAQ. Pathetic meaning only 39.4% of the index is on a buy signal. That is not bullish. This is a very low level. Same here for the S&P 500. It is only at 60. And if we zoom in, you can see we're starting to make lower highs. That is not a good sign. And you can see as well, we need, of course, to break consistently above the 70 level and preferably above the 82.5 level to kick in a bull market. We haven't seen that since, I would say, 2020. So this argues against the bull market. How we're doing on the AD line, looks like we are starting to make lower highs on this one as well. Not a good sign. And that is the same one. How are we doing on the new lows? It's still benign on the NYC. It's creeping up a little bit, but below 50. The NASDAQ remains too high. It's been too high ever since February. But so far, this pattern is a bit ignored, but it does tell us to be vigilant. The McClellan oscillator has now done enough to get rid of these overbought conditions. And if we can continue the pattern as we've trying to track between November and December last year, we should set up for nice negative divergence to kick in a larger correction. Meanwhile, the summation index is getting more and more overbought. So this one tells us that it gets long in the tooth. So also this one tells us to be on our guards and on our watch for a larger pullback. Wouldn't surprise me if we get a nice quick rally to the upside targets to complete it wave 3. And then once reached, we get the wave 4 and you kind of get these false breakouts. That would be the ideal scenario. Meanwhile, the PMO is now on a firm sell signal. So also this one is telling us to be cautious about further upside potential, that we're not going to go all the way to maybe 4,300, so to say, but that if we're going to get the breakouts, upside might stall quickly. So please be aware of that. Lastly, the money managers are getting quite bullish, and most of the time that means we're getting close to market tops. So that's all I have for today. Thank you so much for listening. Take care, trade safe. And if you have any questions, please let me know, and have a great rest of your weekend. Bye.